Despite all this, the S&P 500 is up very solidly through early August. And I think that's confusing a lot of investors. Do you ever feel like the stock market is defying logic? Well, if you felt that way so far in 2025, you're not alone. I mean, let's think about it. We have tariffs that are at 100-year highs. We have numerous wars and conflicts still raging, and in some instances throughout the year, getting worse. We have economic data that is showing the US economy is losing momentum. And we have general political tension that is weighing on investor psyche, consumer sentiment, and the market as a whole. Yet, despite all this, the S&P 500 is up very solidly through early August. And I think that's confusing a lot of investors. So I want to take a minute and explain first how the market has defied this obviously negative logic, and second, explain how the market can continue to hang on and finish 2025 with a strong gain. Now, there are four main reasons that the market has defied those negative events that I just spoke about, and I'm going to list them in order of importance. The first one is TACO. Now, you've probably heard of TACO. It's an acronym for Trump Always Chickens Out. Now, that's a relatively simplistic comment for a principle that the market adopted in April. It's not that Trump always chickens out. In fact, tariffs are at 100-year highs. I wouldn't call that chickening out. Instead, in April, when President Trump backed off of those very high reciprocal tariff levels, it reminded the markets that Trump listens to the markets. And that's very important. Throughout his first term, he would do similar things to what we've seen so far this year. There would be surprising and somewhat controversial announcements, and financial markets would react. But consistently throughout his first term, when the markets started to nosedive, Trump would self-correct. The fear in April was that he would not do that this time, and that's why stocks fell so hard. When the administration slowly backed off those reciprocal tariffs, created the extensions, announced exemptions, that sort of thing, it reminded markets that Trump does listen to them, and that he would not willingly do a policy that sends the stock market sharply lower. That's really the essence of TACO. It's not that he chickens out. It's that he watches markets, he listens to them, and he corrects actions when the market requires him to do so. When investors had that confidence again in early April, that was the end of the declines, and it was the beginning of a pretty torrid rally. Now, the idea that Trump listens to markets isn't the only reason that stocks have rebounded. AI is another big reason. If you look at the performance of the SPY, which is the ETF that tracks the S&P 500, and then compare it to RSP, which is an ETF that tracks the equal weight S&P 500, you'll notice a pretty large performance gap. The reason for that performance gap is AI. The tech sector has once again carried the entire market higher. AI enthusiasm and unbelievably high investment in AI infrastructure by major tech firms is causing the tech sector to substantially outperform the rest of the markets. That, in turn, because of its sector weighting in the S&P 500, has pulled that index higher. Let me be very clear. If it weren't for the very large weightings of the Mag 7, the S&P 500 would not be up as much as it is year to date. But as long as AI enthusiasm stays in place, then the market will have a very strong tailwind, especially the S&P 500. The third reason that stocks have defied the seemingly negative string of events is the Federal Reserve. Now, markets expect the Federal Reserve to cut interest rates. They have expected the Federal Reserve to cut interest rates throughout this year and have so far been disappointed. But their hope springs eternal, and recently the Fed has shifted in a dovish direction. Part of the big June rally in stocks wasn't because of Taco, that was already priced in. And it wasn't because of AI, that was priced in too at the end of May. It was because of the Fed. People began to believe that the Fed would cut interest rates in September, back in June, and that is what fueled the rally to new all-time highs in the S&P 500. Bottom line, Fed rate cuts are an important part of this incredibly resilient market. Finally, stable economic growth has also been an important factor in this market defying seemingly negative expectations. The fear back in March and April was essentially that tariff chaos would cause consumers to slow spending, businesses to slow investment, and for the economy to either grind to a halt or contract. That was one of the reasons the S&P 500 fell so hard in April. Well, it hasn't happened. Economic growth remains broadly stable. Yes, we're losing some forward momentum, but it is stable. And we are not seeing any signs whatsoever that a recession is becoming more likely. In the end, the US economy has proven much more resilient than everybody feared. And yet again, it has shown that it is able to withstand a substantial and surprise shock, just like it did through the pandemic, and just like it did during the dramatic interest rate hiking cycle of a few years ago. That stable economic growth is the foundation upon which the bull market exists. Now, while the market has proven to be resilient, don't let it lull you into a sense of complacency. When I started this little chat, the events that I listed, including sky-high tariffs, are negatives. And just because something bad hasn't happened yet, it doesn't mean it won't happen. So as we move forward into the back half of the year, don't let this resilience make you think that the market can't decline. If we get larger than expected tariffs, if economic growth begins to waver, if the Fed does not cut interest rates in September, or we get some sort of negative AI-related news, then this market will tumble, because those are the four pillars that are offsetting the negative concerns that hit markets so hard in March. And they have to stay intact through the remainder of the year. Otherwise, the bad news I was talking about is going to hit this market, and it's going to hit it hard. Thank you for watching our video. If you found this analysis and commentary useful, please like, comment, or subscribe to our YouTube channel to continue to get important market updates. And go to sevensreport.com to start your free 2-week trial of the Sevens Report.